The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Just reminding traders, if they're new to this channel or if this is the first time you've seen this video, if you go to this playlist, everything you need is in this playlist as it is titled. We go over the templates, the timings, the levels, the behavior of price. This will help to bulletproof your understanding of the best trade setups in the playbook. Again, these are free videos on the YouTube channel to support and enhance the skills and the development of your trading prowess within the playbook itself. Everything you need is in this playlist. Good day, traders. Stacey Burke from Stacey Burke Trading. In our most recent video, we reviewed first red day, first green day in the Asian session for the previous week and the basic fundamental principles of hunting the best parabolic trade candidates in the session that you're trading, differentiating, trying to read a direction or get in a market that's moving in a direction to be in a directional move versus a scalable rinse and repeat parabolic setup, one that can be scaled into growing size into the same types of trade setups each and every week. Today we're going to be reviewing the London session from the previous week, the same basic underlying principles. We open on a Monday. That's our opening range for the week, day 1. Tuesday's day 2. We typically will expand the range. So we can have a narrow range day. We can have a market that breaks Friday's closing range on either the downside or the upside, but typically day 2 will expand the range. Day 3 is the Wednesday, our midpoint range of the week. That also resets heading into our closing range of the week and becomes a new day 1. Thursday is our new day 2, and Friday, of course, is day 3 and our closing range of the week, Free Cash Fridays. Now, last day we also reviewed the basic model for trade entries, the opening range initial balance, page 26, basic model for trade entries, page 29 in the playbook. We talked about the concept of 3-day setups. So we have Monday to Wednesday, Wednesday to Friday. That's our Monday to Friday template. But on any other given day, we can have a 3-day, 3-session setup in any of the Asia, London, or New York sessions. My objective is to have a basket of instruments, and I'm always hunting out 1 or 2 best trade candidates for a parabolic scalable opportunity. Now, as I mentioned last day, we focused on first red day and first green day. We'll be looking at the Europe-London window opportunities that traders that trade those sessions had this week. We also reviewed the understanding that when we come to the screen each day, every single trader has this information: the previous day's high, the previous day's low, and in this particular case, we have Friday's closing price, which is where the auction process begins from when we start our new week. As the week evolves, we have Friday's closing range starting the week, Monday's trading inside of Friday's boundaries, and as the range expands, we will have a new high and low of the week. My goal, my objective again, is hunting out first red day, first green day for larger scalable asymmetrical risk reward opportunities. These are the levels, though, that my trades will take place from. I also reviewed the instruments that I will look for a best trade candidate in those sessions. So we talked about Asia in the last video. Today we're going to be reviewing the London session. And as I mentioned, my main interest is in pairs that are going to potentially move in that London session. Obviously the euro, the pound, to a lesser degree the Swiss franc. And the reason why I say that is that it typically does not have the same volatility, but we will often see a best trade candidate opportunity on that pair over the course of a week or two, and we saw one this week. We'll review that in a moment. Also, the cross pairs again: Euro Australian, Pound Australian, Euro Yen, Pound Yen, and also Euro Canadian, Pound Canadian. And as I mentioned, gold can move in any one of these 3 sessions and is also part of that basket when I'm hunting out a best trade candidate. And just to review the basic timing model, of course, Asia, 8 to 11 p.m. New York time. The Europe-London window is 2 a.m. to 5 a.m. New York time. Now, occasionally we'll see an end of Asia move start an hour prior to that London window. The New York window is 8 to 11 a.m. New York time, and the same process applies. On certain days, we can see it in that last hour of that London window, the 7 a.m., begin a move coming out of the London session that will continue through into the New York window. Today's focus is on the Europe-London window, and we'll be looking for first green day, first red day opportunities on those Euro-London pairs. Now, I also just want to review the basic simple model of the 2 types of setups that I'm hunting, whether it's over 3 days or 3 sessions or a 3-session, 3-day setup. It's either going to be a dump and a pump parabolic opportunity or a pump and dump opportunity. Again, first green day, first red day. So the 2 types of setups on the day when we come to a best trade candidate for a parabolic opportunity are pump and dump and dump and pump. We're going to look at a couple of different opportunities because we have gold here that we're going to go over first. And some traders don't trade gold, but as I mentioned, gold is a fantastic opportunity that can present in any one of the 3, front side or back side, for a parabolic best trade candidate. Thursday, if we just scroll back, this is a 15-minute chart, forms our high of the week. Thursday, Friday, lower lows, and narrow range day and inside day on Monday, day 1, day 2, day 3, giving us a first green day on the close of our opening range. Now, we also talked about our levels. We'll just review this again. I talked about following price horizontally across the board. So we're making lower lows. Our closing price entering into our new week becomes our auction level as we head into the new week. That's the reference point that everything starts from. You'll notice that we have Friday's closing price and then Thursday's closing price. We have a narrow range and inside day. So I've made several videos on the inside days. Go back to this playlist or to the search engine on the channel on my page to review the understanding of the inside bar, the inside day. We also talk about the inside day on page 69 in the playbook, the different types of scenarios for either a false break reversal opportunity or a trend trade, depending on how that sets up and where in the template that it sets up. And also understanding that when the market coils and narrows like this, it's potentially coiling for an explosive move. Now we have a first green day signal. First green day again, page 64 in the playbook, low of day, low of session buying opportunity for a parabolic range expansion within a session if indeed that template sets up. Now understand, if that's a buy low, a low of session, low of day opportunity, then we're looking for a dump and pump template on a first green day signal. Repeating the understanding how simple things can be. We don't have to worry about reading everything, and we're looking for a signal day in a new week in a new template. Now, we just said that dump and pump typically will start with a higher high. It's an inside day. Towards the end of the session, we make a higher high into the closing price of Thursday, and just stepping back and having a bit more of a visual understanding of where volume can be getting trapped down low from the high of the week template, if indeed that sets up on the day itself. Also take a look just at what happened on Thursday. We had a first red day template that completes, it sets up. We have breakout traders from the low of day level that are in profits. There's still traders in profit from this level where the market has broken down. Now, obviously, we have the ability to see that, but this is the type of things that traders need to be looking for on the day as potential trade setups for that parabolic opportunity. Now, remember what I'm saying here. Trade setups, not reading directions. We have day 1, day 2, day 3 signal day. Opening range of the week, an inside day. It's a first green day. It's made a higher high. Timings, levels, behavior of price when we come to the screen in our London session on Tuesday, day 2. We come into our London window. We have the high of the day, U.S. session high. Now go back, review the timings, levels, the video on levels. The peak formations are made in sessions that form a high or low of the day. That represents where other time frame traders have come into the market. But remember what I just said. What type of template would we be looking for if it's a first green day opportunity, a dump and pump potential template? We have a market that has coiled sideways at closing price. We have our basic model criteria for trade entry. Again, that's page 29 in the playbook, the basic model for trade entries. We have our coil inside of our universal EMA. Anywhere back above closing price or into closing price in that timing window gives traders not only the opportunity to position themselves with a starter, but also to scale into this potent parabolic trade opportunity. Day 2 expands the range. Now, just using a simple model high-low consolidation for range expansion gives traders a minimum of 100% target on that range, or the opportunity to follow that up above that level to trap the maximum amount out of a winning trade as possible. If we go back to our 15-minute chart and just scroll across again, we can see not only has the breakout trader been stopped out, but also traders who were short on the break of that peak formation low coming out of our US window were also stopped out. Another level for targeting for taking profits. Again, day 2 expands the range. We have a 3-day template. Day 1, day 2, day 3 inside first green day. Signal day, then timings, levels, behavior of price. We have a dump and pump template off of closing price inside of our basic model for trade entry criteria for a very scalable, highly profitable opportunity in the London session on a first green day inside day trading signal in the London window. On the Euro Yen, we start our week with an opening range inside day on Monday. We have Thursday's closing price acting as a ceiling as we trade up into Tuesday, into the high of the week, into the breakout level from on Friday from Thursday's low of day level. So we had an inside day, narrow range day. Day 1, day 2 expands the range. Now traders will look at this and say, but that's a first green day. Remember, yes, it can be a first green day. It's a low of day, low of session buying opportunity if indeed it presents. As price pulls away, I want you to rethink every time you see price pulling away about my statement of following price horizontally for your best entry. Now, if traders took this buy opportunity in the third hour of the London window, again, when we get to this level, or even to the high of the Friday's closing range. Remember, Friday is the closing range of the week. This area is significant as we start our new week. Day 1, day 2, day 3 goes back up into that high of Friday level, into the closing price of Thursday's level. So we have closing price starting the week. The opening range makes a higher close, and we trade back up into that closing range. So if traders got up into this level, we definitely would want to be at break, even if they took this as a first green day trade. But I want you to remember, on Monday, that's our opening range. Traders are getting caught often on a Tuesday trading a Monday that is trading back up into a range similar to this, or down into a range similar, the reverse side of this on a first red day. And that puts Monday, Tuesday as our initial balance. It expands the range, but that forms our initial high and low for the week now, day 1, day 2. Heading into day 3, Wednesday, we have a first red day, but we don't get a first red day opportunity in our London window. So again, we're inside of the high and the low of the Asian session, inside of the closing price of our opening range. So price is down low and it pushes up. We have a first red day signal. We have an inside day on Monday. What type of template are we seeing evolve now? Day 1, day 2, we've gone up, first red day, pump, consolidation. That's a day 0 type template. So if we go back to our closing range of the week, we have our rectangle. Day 1, day 2, I mentioned this in the Asian video and in the playbook. Often traders look for that trade the next day. They don't get the setup for a sell high of session shorting opportunity, or if they took it in the US window,
as that window begins, we're already down low. So we're being forced to sell down low. Go back and listen to what I said again about following price horizontally for a sell high opportunity, whether it's at closing price on the day, in the timing window. So if traders were shorting that at the end of the London window, clears that low of day level, starts to work into that low into our new timing window, they either need to be at break even or locking in whatever profits they've got. But not to be discouraged, because as I've said and repeat this, the second day after the signal day can be where we see the large parabolic opportunity. Day 1, day 2. Day 3 is also coiling sideways inside of our opening range and initial balance. It's inside, coiling sideways above the low of the week, low of the day level from Monday's inside day. We have inside day traders now long above Monday's high of day. Go back to the playbook, review the inside day trading signal. The inside day can offer us false break reversal opportunities or trend trade opportunities depending on how they present in the playbook, page 69. My apologies, this is the euro, not the euro yen. So we're coiling sideways. We head into our Thursday. Now we've gone front side. So remember, front side, back side, that's Monday, Tuesday, Wednesday. Wednesday's the midpoint range of the week. We've already broken that upward day 1, day 2, upward push into Friday's closing range of the week. We know we have inside day traders trapped. This is the big picture thesis. Where is the money? As we head into our Thursday on the backside, the day 2 on the backside of our Monday to Friday template. On Thursday, we have a lower low right off the bat in the Asian session. It breaks the low of day level. And remember the two types of templates that we just spoke about earlier in the video. In this particular case, we have a lower low made in the Asian session. We're looking for a pump and dump opportunity on the backside after our first red day, our day 3 Wednesday, coiling sideways. Shorts are in the market. Heading into our day 2 Thursday on the backside, lower low right off the bat in the Asian session. We're looking for a pump and dump opportunity in our London window, if indeed it presents. We have our universal entry criteria, the basic model for trade entries met right off the bat in our first hour, an opportunity for scaling in. Peter Brandt calls the rectangle up top a pattern within a pattern. Putting in our high of day level, an opportunity again for a range expansion, taking out our low of the week. This is the euro. So typical, we saw an explosive move on gold. We'll talk about both of these in one moment. But a scalable opportunity for a range expansion profit target. Projecting our rectangle gives us a 200% profit target area for expanding that range on a parabolic move on the backside, taking out the inside day, but also a large coil, a 3-day coil, Tuesday, Wednesday, 3-session coil sideways for the parabolic explosion in the euro in the London session on Thursday. The minimum that traders should have got on this trade is at least 35. If they were getting in and scaling in accordingly up top, they should get 38, 39 pips on this trade, depending on how long they held it. But a minimum of 35 parabolic pip opportunity in this trade. The gold trade on Tuesday offered traders 200 pips of potential profit target. Now, even if traders took a smaller currency pair and got 35 pips on the other pair, that's 70 scalable parabolic pips on 2 trades between Monday and Friday on parabolic 90-10 best trade candidate opportunities. To review some simple concepts in closing, we took 2 trades. There were other opportunities on different instruments, first red day, first green day, but just to give an example of 2 very high probability/possibility 90-10 parabolic candidates. We had a 3-day setup, a 3-session setup, signal day, the template for a dump and pump or pump and dump, and then how did it set up on the day? 2 trades. One gave 35 pips in the Europe-London window. On the euro, on the backside, first red day, gold gave 200 for a total of 235 pips. Now, that's an exceptional move on gold. We'll just talk about some simple math, though. Risk max of 15 on the currency, risk of 20 max on gold on a parabolic coil like that. On $1 a pip, if traders were trading $1 a pip, that paid out $235. And if it was $10 a pip, $23.50. Now, if our second trade had only yielded, or our first trade of the week had only yielded 35 pips, and 35 pips on the backside, and we got a total of 70 pips, just to handle the detractors. If we only got 35 and 35 on $1 a pip, that's $70. If it was $10 a pip, that's $700. 2 weeks at $1 a pip on 2 parabolic opportunities in a week pays for the playbook. But you can use the playbook, rinse and repeat every single week. And there are opportunities 3-4 times a week in your session if you have a basket that reflects those opportunities. These are scalable in size. If you're at $100 a pip, that's $7,000 on 2 trades that had zero stress, zero emotion, and they're trade setups that will show up again and again and again. They're scalable in size, and they will grow your trading business. So stepping back, being patient, and looking for parabolic opportunities. So when traders message and they say they don't get it, they get chopped up, they're marking all the gap, they're asking me about gap time trades, counting pushes, peak formations, all these other things, and they're just not stepping back and allowing the template to set up. There may be a trade on the Wednesday on a different instrument, and then Thursday completes the first red day trade on the euro. That parabolic move on gold may have been the pound for 25 pips. So 2 25 pip trades on currencies in 1 week. 50 pips for the week, a $50 rinse and repeat setup. 2 weeks, again, the same thing. 3 weeks pays for the playbook, but now you can continue to scale those up in size. 50 pips a week by the end of the year is producing you potentially $5,000 a week if you're patient and you don't do anything self-sabotaging in between. First red day, first green day. In our next video, we'll review the U.S. session and the opportunities that presented in the week. And this is just 2 simple models. There are other models in the playbook that gave other best trade candidates in different sessions throughout the week. But in terms of simplicity, you can go back and look at the Aussie dollar. It also completed that first red day trade, I believe on Thursday as well. There were opportunities across the board, but 2 trades, 2 high probability trades that are completely right out of the playbook for rinse and repeat scalable opportunities. Keep it simple, traders. Step back, let the market set up, coil for explosive moves. No matter what anybody thinks, says, or does, these keep making money. Have a great day. We'll see you in the next video, traders.